Hello guys, welcome to the show. As you know, on this podcast, everything we talk about on the show is centered around real estate growth. And if you guys want to reach me afterwards, shoot me a DM on Instagram at door2door sourced. And I'd like to thank Aaron here from People's Capital Group for joining us on the podcast. Aaron, how are you doing today?
Oh, pretty good, George. How we doing today over there?
I'm good, thank you very much. I really appreciate you for coming on. There's really just the main questions that I wanted to ask. If you'd like to introduce yourself to the audience, who you are, where you're from, and what you guys do essentially.
Sure. So I'm from New Jersey here. I'm the co-founder of People's Capital Group. My business partner, Seth Martinez, and I have been helping people build and preserve their wealth in real estate here in New Jersey for about 13 years. We've developed a nice infrastructure of an in-house property management company to reposition apartment buildings that are generally within an hour commute to Manhattan. So we find a lot of opportunity here with mismanaged, deferred maintenance assets that are, within a good commute to Manhattan, but on the Jersey side, and a lot of older apartment buildings that are, deferred maintenance and so on. And we're able to buy those at a great price, pull together investors, family offices, high net worth individuals, accredited investors, and buy these properties and then improve the value of them by improving the management of them, renovating the units as tenants move out, and then repositioning the assets and refinancing or selling over time. So we focus on just buying about 1 to 2 apartment buildings a year. We've about 100 private investors that invest with us, about an 83% reinvestment rate from those clients of ours. And we just try to run a very good shop here, a lot of communication, transparency, vertical integration, efficiencies in our operations, just learn from our mistakes day in and day out.
No, that sounds amazing. That sounds amazing. And what is it typically that you guys look for when you're analyzing deals to say, yep, this is what we're going to go for? Is it mainly like properties which are run down that you want to renovate, or what sort of thing that makes you say, yes, this is what we want to get?
It's really all about value add. Listen, I love Class A real estate. If it was up to me, every deal I'd buy would be a 3-year-old Class A building in a super high demand location that's just mismanaged, right? But the truth is most value add opportunities are more in the Class C and Class B space. So, right now I'm looking at buying a 3-year-old building in downtown Newark that is mismanaged with high vacancy and low rents. And I'm looking at a 100-year-old building in Westfield, New Jersey, which is, managed well. It's like pride of ownership by, an 80-year-old guy who's just kind of like checked out and like has like real pride of ownership. So like physically the building's in great shape, but the rents are like 35-40% below value because he doesn't want to push the rents and have that tough conversation with the tenants, right? So we look for value add, right? We look for decent locations. We're also looking at a building that's next to the #1 hospital in New Jersey, and just so we're always looking at assets. Location's a big factor of it. You can change a lot of things about real estate. You can renovate the units. You can replace the boiler. You can improve the property management of the asset. The one thing you cannot change is the location, right? So location, that's pretty darn important. And then value add, right? How below the rent's below market value, high vacancies, right? Mismanagement, deferred maintenance, things like that we can therefore buy them at a discounted price. And reposition them. The third thing I look for is the story. What's the situation of the seller? We're buying a property from a seller right now. He's in foreclosure on one property. He's underwater on another property. He's motivated. We're buying a property from another guy who his partners are furious at him. They're not producing value, not getting the returns they thought, and they want out of the deal. He's under the gun from his partners and his investors, and he's motivated, right? He's not even a very good property manager. So another gentleman who's in his 80s and having health challenges, and his kids don't want to manage the property, right? So he's got to do something with this thing. He can't just pass away and leave his kids who don't live in the state this 41-unit apartment building who have no interest in managing it, right? And then, so he's motivated to sell this thing quickly, right? So those are the stories, the motivations behind the seller. That's what you want to look for, and that's how you get a great deal in real estate.
Yeah, it sounds like you guys look through a lot of deals. I speak to a lot of syndicate firms, and a lot of them do anywhere from like 2 to 3, and on the high end, like 6, 7 deals per year, but it sounds like you guys are looking at a lot of deals at once. Like that pipeline seems to be quite full. I mean, what separates you guys from maybe other people that only do a couple of deals per year?
Well, we only do a couple deals a year too. I mean, when you're buying larger scale apartment buildings, unless you're like a REIT with a huge staff behind you and billions of dollars, you're probably most syndicators are doing like 1 to 3 deals a year because it takes a lot to take one down. But we'll look at 100 deals to buy one, right? And then we'll actually underwrite maybe 15 or 20 deals, right? So our underwriting team will actually start digging into the numbers. We'll put together a institutional level spreadsheet, Excel sheet that really underwrites these deals very in depth. And but we'll start on the surface and maybe just we call it back the napkin underwriting of up to 100 deals sometimes in a year, and that might lead to 1 or 2 acquisitions. So you got to be very picky in this business. The word no makes you more money than the word yes. And I've never lost money when I said no, right? You might miss out on a deal, whatever, but I've lost money by saying the word yes. So that's what you got to focus on, and so you got to really be picky in this business, and select the best opportunities for the right reasons. But it's also about having great relationships with brokers. We buy deals that are off market. No one else knows about them. They're not sitting on LoopNet. They're not sitting on the MLS. These are pocket deals. Maybe us and a couple other A-level buyers know about them. We have a very small window of time to react to the broker's information, move on it very quickly, and then try to buy it. If I see something sitting on the MLS or even like something that CBRE blasts out to 10,000 buyers, I'm really not going to move on that because I know some institutional level investment group's going to probably outbid me. But I need to get great deals for my investors. They want 17, 18, 19, 20% IRRs. They want really good returns. They want to 2x their money over 4 or 5 years. So to do that, we need to find great deals and manage them efficiently. And, so we'll be very picking what we buy and how we underwrite as well.
Wow. I resonate so much with what you said about the word no will make you a lot more money than the word yes. Like I resonate with that so much because a few years ago when it was a buyer's market, I personally purchased a property at the peak of the market. And then as soon as I purchased the property, we renovated it and we're getting ready to sell it. And then in the process of that, the interest rates had changed. So the interest rates increased because it was the market was booming. And within that period, the time that it took for me to sell that property, which was originally estimated to be a 6-month deal, ended up doubling and being a 12-month process from start to finish. So I resonate with that completely. I mean, with that being said, are there any major shifts in trends in the industry that you're seeing at the moment?
Yeah, I mean, real estate's on sale, my friend. It hits 20% off right now. It's discount rack. It's amazing. And I'm loving it. It's you're absolutely right. The era of like 2020 to like 23, you're not the only guy that got burned, Now, luckily, we knew rates were going to eventually go back up. Money was artificially free. And, so that it was also easy to raise money. Everyone wanted to get in on real estate, which is actually the worst time to get on real estate when bidding wars are going on. Now is the best time to get in. And we did buy one deal at the height of the market, and we'll do okay on that deal because we had a lot of value add, so we can force the value up very aggressively on it. But it's not going to be our best deal for sure, right? So, but the bottom line is right now real estate's on sale. You can get a deal for a great price. Rents have continued to grow, right? So it's kind of a perfect storm right now. We've seen rents grow, at least in the North Jersey market here, like 5 to 8% consistently year over year. Now, the last year, it slowed down a little bit. Rents are a little bit stagnant. They're probably growing at like 2% right now. But it depends on the market. It depends on the market, depends on the building, right? But rents growth has definitely slowed down from the COVID era. But the COVID era was crazy. So
it really was,
So rents have grown a lot. Prices have come down. Yes, interest rates are high. But here's another one to write down. You marry your purchase price. You date your interest rate. Okay.
Ooh.
Yeah.
People in the audience, write that down for sure.
Okay. Right. You can never change your purchase price, my friend. Right. Whatever you pay for a building, it's set in stone. That's it.
Yeah.
Right. You're never going to be able to buy
Yeah.
it again. Right. Whatever. It's set. It's done. Now, your interest rate, well, you're dating that. You could lock in an interest rate, you're 6 months, a year, 2 years, 4 years. Right now, there might be prepayment penalties and things like that, but that's all part of the loan negotiation. The bottom
Yeah.
line is we could change your interest rate. We do it all the time. We refinance buildings, right? We're just doing it right now in about 4 buildings. We had a higher interest rate for smaller assets, and we actually are refinancing now into a lower interest rate.
Yeah.
So that's a great opportunity right now. Rates kind of recently dropped. I think they'll continue to drop slowly but surely. And as rates drop into 26 and 27, which the Fed has indicated they will continue to get behind, then you're going to see prices increase, right? You're going to see cap rates compress and prices increase. Now, there's about a 6 to 12 month delay, right? Because think about it, interest rates have been high for 2 years, and just
Yeah.
now we're really seeing the onslaught of opportunity. People getting foreclosure, the real opportunities, the time to buy. Now, over the next 6 months, rates are going to drop. They're already starting to drop. As rates drop, then about 6 months behind that will correlate in commercial real estate. I'm not talking about resi. I'm talking about commercial real estate. Prices will start to increase. Cap rates will compress. It's how the correlation has worked since the dawn of time. So that's it. So right now, what are we looking at? A window of time where you can get in on great deals. Rent is strong. Prices are low. Rates are dropping. Buy real estate now. Buy commercial real estate now. Lock in that purchase price, which is very attractive, and rent that interest rate. Yeah, you're going to pay a little more than you really want to on the money, but go ahead and lock in that purchase price, rent the interest rate, and then in 2-3 years when rates drop, ideally you can refinance. Now, don't underwrite like that, right? I underwrite assuming rates are going to be what they are today in 3 years when we go to refinance. I underwrite assuming cap rates are what they are today, right? Higher cap rates, lower prices. I underwrite as such, right? And that's your investors are going to want to see. But if that's not the case, that's how you hit a home run in this business, right? And then you exit, you time that market. And again, I'm not a big fan of timing markets. It's kind of a loser's game. It's about time in the market,
I'm in the
not
market.
in the market, right? And that's a common saying. It's about time in the market, not timing the market. But I mean, any basic, investor with a basic understanding of economics right now can see prices are down 20%. Interest rates are indicating they're dropping. They're going to continue to drop. The Fed's indicating they're going to continue to drop. In May, we're probably going to get a pretty bullish Fed share that's going to be pretty bullish on dropping rates, right? So like all this is lining up to, hey, rates are going to drop, prices are going to go up. So buy your real estate now and take advantage of the situation.
Yeah, I always say that to people that are looking to buy real estate. So they say, when's the best time to buy? I said, the best time to buy real estate was yesterday, really. And
Right.
people say, yeah, what about the high interest rates? So yes, the interest rates may be high, but they're not going to be high forever. And they're
Right.
going to come down eventually. And when interest rates are high, it means that you're going to have to increase your rental as well to make some profit. And when the rates come down, you're not going to reduce your rent either. So when it comes down, so it's always going to be a good time to invest in real estate. I mean, how is the period that we're in right now? What effect is that having on you guys' business, if any at all?
Well, we didn't get any floating rate loans. We knew rates were going to go up, so we got mostly fixed rate loans. Any deals we bought when rates were higher than they are now, we're
Yeah,
looking at refinancing those probably like Q1, Q2 of 26 as rates start to drop.
yeah,
And listen, did I buy some real estate in the height of the market I probably wish I paid less for? Sure. But I don't think I've ever walked away from a closing table being like, I wish I paid more for that real estate. Like, you always want to pay less for the real estate you're buying,
yeah,
But I think right now, we've had one deal that had a rate reset happen, earlier this year. It's okay though. I mean, I think our mortgage payment went up like $900 or something, and the property still, there was value add in the deal, right? So we're bumping up the rents aggressively, we're improving the revenue in the building, and when you have so much value add opportunity in a deal, even if the rate resets from a low rate to a higher rate, it still allows you to cover your nut and have a good cash flow on it, right? So it all comes back to value add. You have to be able to push value into the deal.
Yeah.
But there are some deals we're looking to refinance next year. There's a deal we're looking to sell as well that the rate's about to reset on, so we're going to look to sell that. And, but these buildings we've owned them for 4 or 5 years. We kind of squeezed the juice out of them. It's a good time to sell or refinance now, and that's what our investors expect. And that was our initial strategy.
Nice. I'm going to focus on, you mentioned the last part, what investors expect, which is what I wanted to get into. Really, the main topic of the podcast is moving past the friends and family side when it comes to raising money for real estate deals. So what advice would you give for people who maybe they've bought the first few deals, raising capital from the friends and family, and now they want to broaden themselves, they want to expand? What advice would you give to those people that are maybe they're wanting to go out and raise capital from investors?
Well, George, it is a tough equity market. I'm not going to lie. If we didn't have a 12-year track record and 100 investors behind us, it would be tough. It'd be tough to get started right now. What I'd suggest is actually, putting some money behind it, right? It's like any business. The more resources you have to put behind this, the better. Whether that's hiring a broker dealer or hiring a marketing company that schedules calls for you with accredited investors, not a marketing company that drives leads, right? Because I've hired, Facebook marketing companies, and I got a bunch of broke people filling up my CRM, right? That's not what you want, right? You want a company that actually schedules calls with qualified investors. They already pre-qualify the investor. They pre-qualify their liquidity, their accreditation. They drip on them to get them, schedule a call on your calendar, and then they text them and email them before the call to make sure, they're going to actually attend the call, right? And you might pay $200 for that call, right? But that's everything they need to do behind the scenes to get that call scheduled. It's far better than just throwing money at a marketing company who's going to be like, we're going to make really fancy ads and put them on Meta, yeah, you get a bunch of broke people, and that's nothing against broke people. I've been there for sure myself, so it's, but that is the scenario. And unfortunately, if you want to raise money, you need to be talking with liquid, high net worth individuals. That's it, right? So look into those companies. There's plenty of them out there. The other thing is you got to get your brand in line, right? What is your brand? What is your message? What is your niche? We help people invest in Northern New Jersey here. We're Northern New Jersey market experts, vertically integrated.
Yeah.
About 90% of our investors are in the Jersey area here, at least the tri-state area, right? So people like investing in buildings they're near, and they know these cities. They've seen downtown Newark flourish over the last decade. They want in on that. Jersey City, they've seen prices triple in 12 years. They want in on that, right? So that's the types of investors we tend to attract. That's our niche. That's our brand. So know your brand, recognize it, make it simple and understand, and basically put some money behind it. You need to market smart. Again, I wouldn't just throw it on Meta ads. I wouldn't just get a bunch of leads coming in the door. Use one of those companies that actually sets up calls with investors, and then also hire like a branding marketing company that sets up your drip system, right? Your texts, your emails, your branding, your landing pages, your whole system. What happens when someone fills out a form to download your ebook? What are they going to get? And we could actually always improve on this ourselves, so that by the time someone is actually on the phone with you or your client relations manager, they know about your business and they trust you. They know, like, and trust you. And that's the 3 things someone has to do to write you a check: know, like, and trust. The deal's got to be good too, but generally the know, like, and trust, that's got to come first, or you're not going to get to the deal. So raising capital is tough. You got to be talking to the right people. It takes a while to build those relationships. You're not selling a coaching package for $99. This is a very different decision and you have to make sure your whole sales funnel is in place for a high level close, essentially, on the right investors, and it takes time. So start doing this before you have a deal. Have your buy box. We're going to find 40 to 150 unit value add apartment buildings within an hour commute to Manhattan, right? And we're gonna sell them over 3 to 4 years, and we're going to target returns of 17 to 19 IRR with cash flow starting, in the first year. That's our buy box. That's the investor experience. That's what we're targeting. Now, we're going to bring you that in 6 months, but if we brought you that opportunity, how much would you be looking to invest in that opportunity? 100,000, great. Okay, we'll mark you down for 100,000, right? And half of those people aren't going to actually write the check for 100,000, right? But line those up, those soft reserves, get those relationships in place, and then find the deal,
Right.
And that's it.
Right. Okay. That makes perfect sense. If I'm somebody in the audience listening, I would have maybe picked up on you saying about the side on meta ads about um, not just hiring a marketer to get you bad leads, essentially. So, what other marketing channels would you advise the people listening to maybe go down on rather than just meta ads?
I don't want to suggest any specific company because honestly, we're about to hire one ourselves, but I don't know if they're any good, and there's a lot of them out there, and we've been shopping around. What I would suggest is, reach out to me. You can email me at aaron@peoplescapitalgroup.com. That's AARON @peoplescapitalgroup.com. And I'll let you know who we're talking to, and I'll let you know how the experience is going. And probably by the time this airs, I might have more, headway with some of them. I'll also tell you who not to hire, which I wouldn't want to say on your podcast either because they're all running small businesses, but they certainly suck. And they can go fly a kite because they already took me for 20 grand probably, So, yeah, and that's the thing, man. You'll get SEO companies promising the world. I had one SEO. Oh, gosh. They were so bad. Every call, they were just, oh, we're going to do that. We're going to do that. Don't worry. We got you. It's amazing. We're going to. And $38,000 later, I had 4 leads, and so I don't know. I've heard a lot of people say SEO is dead. We have decent SEO on our site, but I don't invest $1 in SEO anymore. We have a decent setup for SEO, and that's it. So it's hard to say. I like the companies that do all the marketing themselves, do all the drips themselves, line up, do all the qualifications themselves, and then line up a call on your calendar with an accredited investor. And then, yes, it's your job to close them, absolutely. But, that's half the battle. Right, getting that call on your schedule with a warm, qualified lead is half the battle in raising capital. So take a look at those companies. There's some out there that want 25 grand up front to set up 40 calls. I don't know, it seems like a lot. There's other calls that'll do $200 a call. That's about industry average for a qualified accredited investor, right? And then, like I said, the marketing and the branding end of it. Then once you get that person into your system, you also have to have an equally as professional and effective drip campaign for them. The right messaging, the right emails and videos and texts that are going to build rapport with that individual, target their fears and desires and so on, and also build trust in what you're doing, talking about your experience and your background and your strategy and how you help them solve their issues, which is mostly security with their money, right? I mean, most of the biggest fears, am I going to lose my money? What happens if I lose, I don't want to lose my money. I work too hard for this, right? So how do you make sure I don't lose it? How do you make sure I outperform the stock market so I don't feel like an idiot for investing in an alternative and a lesser known company? And how do you, what are the tax benefits and kind of the nitty gritty, of it? And also the story, man, this is a opportunity that other people wouldn't have access to, right? This is an off the radar deal. This is, something that your friends aren't going to know about, and you're going to crush it on this one, and you're going to be the cool guy at the barbecue because you found a good deal that made you a lot of money. But it's everything, man. It's know, like, and trust. It's the track record. It's the marketing materials. It's not giving them too much at once. It's playing the game of not being like a needy sale. You ever get on the phone with a salesperson, like the email they send you has like 18 links and like 53 PDFs, and like they're like begging for your next call, like that. You gotta. It's also it's psychology, right? It's like you're running a real estate business. You're the man. You're the freaking man. They need you. Okay, they could keep their money in the S&P 500 and chug along at 10% a year, pay their taxes on their dividends, or they could get in on what you're doing, and you can absolutely upgrade their real estate investment portfolio and get them into alternatives, tax benefits and cash flow and huge liquidity events upon the exit on deals that no one else knows about. All right, and you got to have that mindset. Don't be a jerk in your emails and your texts and your messages, but like you're a valuable resource to them as they are to you, right? So have a mutual respect. You are on the same level as them. You're not begging for a sale, maybe this, that, and listen, I'm guilty of that myself, right? Because I sold real estate as a realtor, and like that's like the salesman mindset. So you gotta, be like, if someone's not responding, I'm like, all right, where do we go from here? I'm not like, please schedule a call, I miss you, no, it's like dating, man. The more focus you give to someone you're trying to date, the more you beg them, the less they're going to be interested. Don't text her for 2 weeks. Don't text her for a month. Watch, she'll go crazy for you.
No, that's some really good insight. Thank you very much for that. I'm sure the people in the audience would really appreciate that. You've given so much for people to go away, take away, and also implement, really, because that's a lot of valuable information there for people that are looking to maybe break away. Maybe they've exhausted their warm network and they want to start going to the cold network to try and start raising capital for their upcoming deals. I mean, what about you guys? I mean, where are you guys right now? I mean, how's everything going in the for People's Capital Group? What's currently
Good.
working
So
so well for you guys?
yeah, we're starting to do what George is. We're starting to do the fund to funds. So to your listeners out there, if you have a lot of like active investors on your podcast here, people that are kind of looking to do what I've done over the last 13 years, I'd suggest looking into the fund to fund strategy. And again, shoot me an email, aaron@peoplescapitalgroup.com, 2 A's, AARON, and let's connect, because what we're doing is we have the whole infrastructure in place. We have the management company. We have the deals. We have the track record. We have the platform, right? The software for investors to sign up on and so on. We have the bookkeeping system. We get monthly updates, quarterly financials, annual K1s, quarterly distributions. All of it's done for you. So as a fund manager, all you have to do is focus on raising capital, and then you can earn fees on the capital you raise legally, and you can earn an override on the profit your fund is earning legally, right? So that's the buzzword right now, fund to funds. Now on our end, we offer you the marketing materials, and we make it as easy as possible. We say, put your logo here, put your company description here. Here's the 50-page deck on the whole deal with the market research, our past performance, and so on. That costs us $2,500 to put together. You get that for free. You put your logo in there. You put your information. It's really simple to do it. We give you the one-page summary, which is kind of how you open up to an investor before you send them a 50-page deck, right? Have them look the one-page summary. And again, put your logo here. Put your information here. We make it very simple for a fund-to-fund managers to get started with us, and then we do a weekly call with them. So it's all free, but we kind of get together on a Zoom meeting. We talk about the challenges we're all having in fundraising and ideas and solutions, and we motivate each other to do better and reach further and raise more capital and service our clients better. So, so between the weekly coaching calls, between the marketing materials that are editable for your logo and your company, the deck, the software, the platform, and we'll put you in touch with a company called TribeVest, which we like a lot for fund-to-fund managers, which can get you up and running with your fund in like a week for like $5,000. You get a whole fund going, and by the way, your fund will pay for that, right, when investments start coming in. So I've seen people put that on a credit card, go out and raise capital. You raise some capital, you pay back that cost. But listen, $5,000 to start a whole fund, which you can make $150,000 on over 5 years, is a great return on investment. So, and if you're, able to raise $500,000, $1 million, this is how you do it. And you structure the fund to funds. We'll walk you through the whole process. TribeVest will help you on the administrative side of it. With the back office, they handle all that as well. and it's really much more affordable than you think and easier than you think to do it. So I would suggest doing the fund to funds to get started and teaming up with a group like ours. Doesn't have to be us, but we offer that to fund to fund managers.
Nice. And if you guys want to reach out to Aaron, I'm going to leave his contact details in the comment section below, in the description below, his email, LinkedIn, and all his social platforms for you to reach out to him. And yeah, Aaron, thank you very, very much for coming on the podcast today. Really appreciate everything that you've shared with us today. And I'm sure that everyone that's listening is going to take some very good actionable steps from it. So yeah, thank you very much for everything that you've shared today. Have you got any final thoughts for the audience?
I think that's it, George. We've really I think it's a great time to buy real estate. I think it's a great time to raise money. A lot of people are interested in getting into real estate right now because they see the rates are about to come down and prices have come down in commercial real estate, and they see how expensive renting and owning a home is. So it is a good time to get out there and raise capital, but you have to have the right team behind you and the right strategy. So I see a lot of people being successful with the fund-to-fund strategy. So, again, Aaron at peoplescapitalgroup.com. Let's connect. Let's raise some money together, my friend. Let's do it.
Good stuff, good stuff, good stuff. Well, thank you very much, Aaron. Thank you very much for coming on. And I'll leave your details in the description below. I'm sure people will be able to reach out to you. And yeah, hope everyone makes some money. Thank you very
Thanks,
much.
George.